Hello there, welcome to this edition of Global Business Africa. Happy holidays everyone. The markets are shut down, but there's still plenty of business content to look at from across the African continent. Here's what's coming up. Black market hawkers are cashing in on a weakening naira. The central bank, however, believes it's appropriately priced against the dollar. Ugandans are paying twice the regular amount as pump prices are not reflecting the drop in the global price of crude. And we'll introduce you to South Africa's youngest social entrepreneur. And she's got quite the passion for defending rhinos. Let us begin in Africa's largest economy, where the central bank says the post-devaluation ban for the naira is, and I'm quoting the CBN here, appropriately priced. Black market hawkers, however, don't really care. They're out on the streets, they're trading the naira 3 to 5% below its floor and making a killing in the process. Despite an 8% devaluation of the target band and efforts to crack down on currency speculation by effectively crushing liquidity, the naira still remains at record lows and well outside the target band. Nigeria devalued its currency and widened the target trading band to 160 to 176 naira to the dollar, but few analysts believe that can hold given a steady decline in reserves. While the central bank and the markets argue over the naira's fair value, it's on the streets where the price is fluctuating. The rise in the dollar in a heavily import-dependent country caused pain during the shopping season, with small-scale traders saying sales have been badly affected. Let's stick with that particular topic. It seems Nigerians are having a rather woeful Christmas season in 2014, especially as consumers are worrying that this weakening of the naira will effectively push up prices of goods. Informal markets were stocked with glittering decorations and colourful baskets at discounted prices, which are usually popular during Christmas, but buyers have effectively reduced to a trickle. Many traders in Lagos's popular Balogun market are surprised by the poor turnout of customers, even as the commercial capital draws people from various parts of the country looking to buy goods, but at wholesale prices.
They are not coming as usual. There is a difference between this year and next year. This year there is no market, and the dollar, they said that it go up. So there is no, we haven't seen all our customers. Even all the people that are booking from us, we didn't see them.
The sales is very good before, but not now. Now the business is very dull. We are still expecting some people to come and buy. Don't see them. We don't know what is happening. Maybe the dollar of this election, maybe that's what caused it that we don't see them. I don't know. But we are still expecting them.
The light is okay, it's nice. I've never seen such thing. I really feel impressed the way they decorate everywhere. I'm traveling, that's why I'm trying to snap so that at least I'll go and show my younger ones that this is how Lagos, they arrange their own Christmas, the lights, everything. Despite the fact there is no money, but yet in Lagos there is money, they are just spending it the way they see it, but in other places there is no money.
Now, with the festive season in full swing, many energy consumers across sub-Saharan Africa are expecting fuel prices to fall, in line with a nosedive in global oil prices. Brent crude futures have gone as low as $60 a barrel this month, sometimes even lower than that, from a peak of about $115 a barrel in June. But as Michael Baleka reports from Uganda, consumers there are yet to see a drop of comparable scale at the pump.
Uganda is a net importer of petroleum products, and the prices of goods and services are determined by the cost of fuel. However, as global oil prices continue to decline, the local pump prices are yet to ease.
We are a landlocked country, meaning that we have got to transship all our products from the ocean or from the ports in Mombasa and Dar es Salaam. We do have stock that is rolling at any one time in the supply chain for over 2-3 months. Yeah. So when the price on the world market drops, you definitely will not see that come straight into the pump price on the market in Uganda.
Pump prices have for the last few months remained constant in the East African country, with a litre of petrol going at $1.3 and a litre of diesel at $1.24. At this bus station in downtown Kampala, travelers line up to book a seat heading out of town for the Christmas festival. It is one of the most expensive rides of the year, as transport fares to many parts of the country double or even triple.
You know, Christmas, there are no passengers coming from up country, coming to Kampala. People want to go for Christmas in the villages. Now from the other side, we rarely don't get people. That's why you see people hike. They hike fares because they want to compensate for the other journey of coming back.
Fuel dealers believe the cheaper oil imports will gradually result into lower fuel prices at the pump, giving relief to both transporters and travelers. However, they are concerned that the volatile local currency, the Uganda shilling, may not allow this to happen.
Whereas the dollar, the price of the crude is coming down, the shilling is depreciating, which means we need more shillings to buy $1. And if you do the mathematics, therefore, the rate of the price of the fuel in Uganda shillings definitely will be slightly higher because the dollar is higher.
Experts expect the trend of oil price drops to continue into the half of 2015. The recent oil and gas finds across East Africa have positioned it as a lucrative investment destination in Africa, with the potential of speeding up economic growth in the region. However, continuing decline of global oil prices in the long term is not good news for Uganda and its counterparts, as it threatens the region's economic prospects. Michael Baleke, CCTV, Kampala.
Now, festive season spending is usually a fairly interesting proxy indicator of how well or how poorly a country's economy is doing. Now, by that indicator, Zimbabwe's economy is doing rather badly. Traders at the markets in the capital of Harare are reporting a drop in the number of shoppers.
Christmas celebrations in the capital Harare are low-key. Many say they can barely afford the luxuries of the festive season. Flea markets in the capital were empty in the days before Christmas. Shelter Mavata runs a stall in the market and says business is tough.
This year has been very difficult for business. During this period last year, I'll make between $800 to $1,000 per day. But this year, I'm making about $1,000 per day. The other thing was, I did not have enough capital to stock enough goods. So it's been very bad.
More people choose to stay within the city rather than travel to the countryside to be with their family members due to the high cost of transport. Mavata might be forced to close down his business if the present economic trend persists in 2015.
I hope 2015 will be better, but if I don't manage to get enough capital for my business, it will just be another difficult year for me. There are so many flea markets now and business is very low.
And while many are struggling, others have saved enough to enjoy the festive season.
I think this year we'll have a very good Christmas because I have prepared for it. My grandchildren and family will be very happy.
This Christmas, people are not spending too much. That's because they are broke. So this Christmas, I think we are going to be very peaceful.
And while the outlook might be pessimistic at the moment, Zimbabweans are looking forward to better economic conditions in 2015. Penina Karibe, CCTV.
Now, for many consumers, Christmas shopping is effectively over, and you're probably now focusing on Boxing Day sales, if you're getting that far, that is. Online shopping, however, is becoming increasingly popular in several countries across sub-Saharan Africa. Over in Cote d'Ivoire, one online retailer had a fairly interesting surprise for its clients.
African online retailer Jumia emerged out of Nigeria but has a big presence in Cote d'Ivoire. It offers a wide selection of electronics, fashion, home appliances and toys. And with the delivery service, this year the retailer added a special touch: Santa Claus.
So we start with 6 Santa Clauses. We're going to have one that will deliver gifts to a winning family and another one who'll surprise an Ivorian customer who's paying for their purchase at Jumia by delivering them several more items. They have the option of having their gifts delivered by a courier dressed as Santa Claus in a car or motorcycle.
E-commerce is in its infancy in most of Africa, but it is growing exponentially, with a growing middle class, with money to spend and the advent of online retailers such as Jumia, partly owned by South African phone operator MTN. Jumia also has operations in Morocco, Egypt and Kenya and aims to be Africa's answer to Amazon. In emerging markets like Côte d'Ivoire, it's usually price comparison and availability of products that entices shoppers onto the web.
The enthusiasm shown by Ivorians illustrates their expectations. We all know it's a festive period and people tend to spend more, and Jumia has both quality products and quality service, but also guarantees getting more for your money on a smaller budget.
This year, the Hudson family was on Santa's surprise list. Louis Hudson, his wife and young son won free gifts from Jumia as part of the retailer's holiday promotion.
We had planned to buy a new television, but we had a little bit of a setback in late November, so we could not afford to buy it even for Christmas. So it was really difficult. It's a double joy for us.
Ivorians say they are cautiously optimistic about the country's future as the world's top cocoa producer continues to rebuild its once thriving economy. Valdi Carosa, CCTV.
Right then, as I mentioned a little earlier, most of the markets that we do track across Africa are essentially closed. This, of course, being a holiday in several of those countries, Nigeria, South Africa and in Kenya. EGX30, however, was still pretty active. We're not going to be interested in the numbers today, however. It was down about 0.3 for those of you who are interested. We are keeping a close eye, however, on the bidding war that is still continuing between Kellogg and Abraj, the Middle East's biggest private equity firm. They're both bidding for Bisco Misr, an Egyptian firm. The latest offer from Kellogg, $12.57 a share. The bids close on the 31st of December. We'll be in Djibouti next. It wants to tap into its unique location and scenery in order to grow its tourism market. And we'll also be in Egypt yet again, looking at its plans to end youth unemployment. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast changing African business landscape. We take you where the business is happening.
This is the first year that Africa will have more foreign direct investment than aid. And it's like the tipping point in terms of changing the way the continent is perceived. And I think this summit very much responds to that call. Now, whether it can materialize what is being announced is something that we'll have to check and see whether it happens.
Welcome back to the program. You're still watching Global Business Africa. Let's take you to Djibouti, located in the Horn of Africa. It occupies a fairly unique and strategic position in the mouth of the Red Sea and Gulf of Aden. It also happens to be home to a variety of in that country is still fairly nascent, and the government over there now wants to make more out of that industry. Girum Chala has more.
From coast to coast, Djibouti is only 23,000 square kilometers, but in it are magnificent natural sites, typical allure for tourists: deserts, sea, forests and mountains. The lakes and islands are also Djibouti's source of pride. But beyond its salt, Lake Assal is known to be an emerging tourist site. Visitors from all over the world come here to enjoy floating on the salty water. The government says it is committed to develop the country's natural resources.
We have a master plan realized with the help of the WTO, we have a number of laws in our investment code. We have so many facilities for those who want to invest in the tourism sector.
And so, attracted by the tourism master plan, it's locals like Omar Hussein who pioneered the hotel investment on the Red Sea. He has managed to set up this beautiful resort right next to the water.
Simplement parce que je suis natif de l'endroit.
I started when I was young because I used to come here to swim. But later on I started with bringing boats here, and after the boats I have started bringing in clients. That is how this business started.
J'ai compris qu'il y avait une opportunité dans le tourisme.
Djibouti has huge tourism potential. Here you can have all the fun you want, from the dry land to the sea and the life in it.
When you come here, first you see the rest we are taking here, the calm and the silence place and the beautiful view. The important thing is having hotels in front of this.
However, the nation is yet to see glory days for its tourism sector. The tourism sites and resorts are still under-promoted. Omar says the bright days are coming soon.
Tout d'abord, il faut que, pour que le client vienne,
First of all, when you start putting together a place, you have to work on the infrastructure and buildings first, then invite the visitors to come. And now that we have everything set up, we have started discussions with Ethiopian tour operators to help us bring tourists here.
les agents éthiopiens sont venus aujourd'hui.
If you want to attract tourists, you have to show them what other peoples or other country cannot show them, and good prices. And this is why we are trying to invite Ethiopian tour operators.
For now, Djibouti is convinced that tourism can become the engine for its economic growth. Delivering that is yet to come. Grumtala, CCTV, Djibouti.
Let's Work is a program launched under the sponsorship of Egypt's Prime Minister as part of efforts to address growing unemployment levels in the country. Yasser Hakim filed this report looking at how this program will help Egyptians get back into the job market.
The violence and unrest that followed the 2011 uprisings led to three major sectors hitting a near standstill: industry, real estate and tourism. The result is that unemployment hit record levels, reaching 20%. To address this problem, the government announced the Let's Work initiative, where it endorsed the creation of Ayadi, a $2 billion company to fund SMEs.
This will be a ray of light for the youth. We will fund the SME and help in marketing. But the youth must work hard for their project to succeed. It won't be easy.
Youth have always faced difficulties in establishing small and medium enterprises in Egypt.
Banks would not provide loans to the youth, only to the big businessmen. There are complications in the regulations and acquiring land. The initiative is excellent, but we need new laws and regulations to facilitate investments.
Officials say the new company will be a catalyst and role model to solve the unemployment crisis.
We start with $2 billion, but it will double every year. We will train the youth in industrial clusters, fund the projects, provide the material, and help them succeed.
A larger number of SMEs means more employment opportunities to the youth. Youth are a major force here, as they form 2/3 of the population, but they also include the highest rate of the unemployed. That's why targeting this group will not only develop Egypt economically, but socially too. Yasser Hakim for CCTV, Cairo.
Let's make a quick run through commodity prices. Brent crude still pretty much hovering around the $60 a barrel mark. What was of interest today, however, was the Saudis' budget. Came out earlier today. Total spending, $230 billion, running a deficit of $39 or so billion in that particular year. But The assumption, at least based on the economists who've looked at these numbers, is they're probably assuming that oil prices will remain around $55 a barrel and their production will remain steady, and any deficits they do incur will be covered by the reserves they've accumulated in the last decade. Coming up next, we'll introduce you to South Africa's youngest social entrepreneur. She's got a plan to save the rhinos.
BizAsia. Asia means business.
Welcome back. 20 minutes into the hour, you're still watching Global Business Africa. Now, despite several efforts to end the rhino killings, poaching is still a significant problem in South Africa. In fact, it does continue unabated. South Africa's Kruger National Park has now resorted to actually having to relocate the rhinos altogether in order to keep them out of reach of their would-be killers. The park shares a border with Zimbabwe and Mozambique. It's the worst affected by poaching so far. Over 1,000 rhinos have been killed in 2014 alone, most of those in the Kruger National Park. Now, given the scale of the problem, many a South African is getting involved in the fight against poaching. And that includes one of the country's youngest social entrepreneurs, as Sumitra Naidu reports.
My name is Alyssa Carter and I'm 8 years old and I'm the Sandparks Rhino champion.
She may be pint-sized, but South Africa's youngest entrepreneur, Alyssa Carter, has taken a big stand against rhino poaching in South Africa's largest game reserve, the Kruger National Park.
I'd feel very sad if there wasn't any rhinos because they're my favorite animals. I like their horns and I like the color that they are.
The Kruger spans 2 million hectares, bordered by Mozambique and Zimbabwe, making it difficult to police. Alyssa started a Save the Rhino fund 2 years ago to raise money for sniffer dogs.
When I was learning about endangered animals at school, that's when I decided to do this fund. I sell chocolates and stickers and lollipops and little sweets and biscuits and stuff.
Often I just go back and think about that original day when she came home and she said, "Mom, Dad, this is what I'm doing, this is what I want to do," because I cried at school when they told us about the rhinos being killed.
And my dad was my first customer. He bought a chocolate that was 10 Rand, which is $1.
Alyssa also speaks at conferences and schools in Johannesburg to encourage donations. She has raised more than $26,000 since she started the fund. Each sniffer dog costs $10,000.
Her money that she has generated from various corporate companies, sales of the sellage of chocolates and so forth, will now be used to actually purchase the dogs for the Kruger National Park. The dogs that Alyssa's purchasing will be used at the various gates, entry gates in Kruger Park, to sniff out various aspects such as animal parts, weapons and so forth.
Of the more than 1,020 rhino that have been killed across the country this year, 2/3 of them were in the Kruger alone. Alyssa says she will not stop her fight until the rhinos are saved. Sumitra Naidu, CCTV, Johannesburg.
Right then, quick round through the currencies here for you. We're seeing a bit of weakness bleeding through into the Naira, 181.95, and of course the Kenyan shilling as well, back up to 90.50 from the 90.25, 90.30 regions, in which it has been hovering about for the last couple of trading sessions. Now then, here's what we're working on for tomorrow's program. 2 American senators have threatened to have South Africa's AGOA access to the US market reconsidered, effectively stopped, unless it allows American traders to sell unpopular chicken parts in South Africa. It's a bit of a trade war brewing here. We'll have the latest details and the perspective from the American side. We'll also be looking at the process of breeding ghosts for that fairly rare but very lustrous rare Angora wool. All that and more is coming your way on the 26th, but that's it for this edition of Global Business Africa. Send your feedback to globalbusinessafrica@cctv.com, and of course, whenever we're offline, Facebook and Twitter are your ports of call. Thank you so much for watching. Happy holidays, everyone.